Accounting 101 series. Today we're focusing on the income statement, also known as the profit and loss statement. This report shows how much money your business is making and where it's being spent, making it essential for understanding profitability. By the way, I'm Nanette Bill Picayo, CPA, a virtual bookkeeper and accountant.
Let's go to purpose of the profit and loss statement. So the profit and loss statement provides a summary of your revenue, expenses, and profit and loss over a specific period. So this is for a specific period. For example, for the month or for the year. So revenue, this relates to different income, expenses, and profit or loss over a specific period. A specific period means for the month and for the year. So a specific period because we will not carry over the balances of the period. For example, for 2023, the ending balances for 2023 will not be carried over to 2024. Key components of profit and loss. So, mentioned here, revenue. So, revenue, total income generated from sales of goods or services. So, yeah, it is self-explanatory. So, sales of goods and services. So, everything that you have sold that relates to your core business, the goods and services, so they will go to revenue, total income. And then cost of goods sold, COGS for short, so direct costs associated with producing the goods or services. So they refer to the direct costs. So meaning if your revenue here, if your business is on selling goods, so from sales of goods, so the associated costs here would be the inventory, beginning inventory, the cost of goods sold, purchases for resale, and then the cost of goods, the purchases, the items, the cost of the items that you sold, that you sell to have the income. So they refers to the direct costs. If, for example, if you sell one item of ball pen, so this item, the purchase cost, the cost that you incur to have this item will be included in the cost of goods. That's called purchases, cost of purchase. And then if your business is on, for example, for me, bookkeeping services, so the cost of goods, the direct cost for these are the cost of the employees, cost of the time they rendered for the services for the particular client. So that's the services. And then gross profit. So gross profit, revenue minus cost of goods sold, that's gross profit. So the gross profit will represent how much you earned, how much is your profit after you deducted the direct costs. So for every $1 you sold, $1 in your income. For example, you have 0.75 in your purchases, so you have 0.25 in your gross profit. So you have 25%. For every $1 you will sell, you will incur 0.75. So you have 0.25 that you can call them gross profit. 25% gross profit. So that will be your benchmark. So for example, you will for every item that you will sell, you will have 25% gross profit for that one. Of course, they will depend on what you sell, how much, and of course the selling price of this. For example, our ball pen, so the selling price of the ball pen. Yeah. Operating expenses. So operating expenses, day-to-day expenses such as rent, utilities, and salaries. So for example, rent is not associated to the sales, the cost of goods sold. It since rent is for the whole, for the company, so it will be categorized in the operating expenses. So operating expenses examples are rent, utilities, and salaries. So I mentioned earlier the salaries. So salaries, cost of goods sold, salaries can be also in cost of goods sold if you're on services, if you use your talents, the talents of the people, if you're on services. For example, just like my example, the bookkeeping services. So yeah, but here salaries here are for the managers that do not associate directly to the costs, to the income. I hope you understand. For example, the company president, so that belongs here. Then the net profit. Net profit is the final profit after all expenses, taxes, and interest have been deducted. So yeah, if revenue, so the formula will be revenue, cost of goods sold, so that will equal to gross profit. And then from gross profit, you will deduct the operating expenses. So operating expenses, taxes, and interest. So that will result to net profit. So this is the sample of profit and loss statement. So my example refers to comparative profit and loss report. So year 1, year 2, year 3, so sales, materials, labor, overhead. So yeah, this is the example of what I have mentioned earlier. By the way, I would like to reiterate, the materials is the cost of the purchase. So if you have the labor here is if you produce a product, if from that materials you have another, you will use those materials to create another product, so that will be for the cost of labor. Labor means the cost of the employees the salaries of the employees that you paid to them, so the product will be available for sale. And then the overhead, is the cost of the items that were used for the generation, for the manufacturing of the product. So, for example, for the utilities overhead, you can allocate the utilities, for example, electricity, water, since they use electricity and water to manufacture or create a product. So, you can allocate electricity and water to this overhead.
Today, we covered profit and loss statement, breaking down its key components and what they mean for our business. Next time, we'll explore the balance sheet, which provides a snapshot of your business financial position. If you found this video helpful, please give it a thumbs up and don't forget to subscribe to our channel so you won't miss the next video in our series. Feel free to comment below if you have any questions about the topic or other topics you'd like us to cover. Thank you for watching!